Shabby Cycles with an update on December the 11th. So is the bear market rally over, or are we in a new bull market? Here's my 3.5 year cycle, and as you see, the cycle is about to make a low and is turning up. But looking back at previous 3.5 year cycles, we see that some bear markets make their low a lot later than the current point in time. Therefore, I realized that we also have a 7-year cycle, and we have one in 15 and 2009, 2002, 74, 80, going back. So from this cycle we could still need a capitulation down, or we could start to rally. And if we look at some offsets, you know, we were below these offsets, we broke above, and now we are going back into this band of offsets again. And if we were to break below here, we should get deep downside target here. And from my pattern recognition, I see this as a move down, and then we are in the consolidation phase, and we could still have some weeks going sideways here before we should have the capitulation. Another similar one, very similar, and some analogs here show this pattern. So I should say I have some opinions, and opinions are dangerous. They are not that objective, but my opinion here is that around, well, in 2021 I saw some patterns. I recognized some similarities with the 2000 top and 2007. We had Tina, there is no alternative, everything was a bubble. We had record high IPOs and stupid companies going surging up, and so I thought this could be a hard landing coming up. Also, I think inflation is one of the problems. Market is a bit much focused on inflation, I think, but if we were to start a new bull market from current point, if the Fed was to allow a new bull market, we have the situation with Russia and Ukraine, and even if that should suddenly resolve, these are long-term problems with energy and all. So if we were to start a new bull market from record low unemployment, history shows us that the CPI is going to rise. If, however, the Titanic starts to leak, that is, if we see unemployment shoot up, then we could have a bull market with falling CPI. But we haven't seen that yet, and until we see unemployment go up, I think the Fed will have to not allow any bull market to start. But when we see unemployment go up and the Fed starts to pivot, rates are going down, that could be a setup for a new bull market. This could be 2 videos today, a lot to show. So I mentioned the 7-year cycle, so here we have that one in red, and it kind of suggests one move down into February, March, and possibly a last one into the summer sometime. So we are at this critical point here. So are we to break up or to go down from here? We have the historical bear market rallies. I have tried to pick all of these bear market rallies, and if we look at the average, we see the current point here is about where these bear market rallies are over. Could still allow 1 week or so with a last pop, maybe a shoulder or something. So let's have a look at some cycles. So the dominant cycle should be the 16-week cycle or the 80 trading day cycle. And if we look at the offset of 2 of these cycles, we see this should be a hard resistance to break through. We are well below these, and we should, in the bearish case, go down from here into February, March. But also we should see here in purple we have the 10-week cycle, and that one is turning up from here. So the 16-week cycle should be dominant, as we see in the composite cycle here, but we should expect some kind of reaction up with this 10-week cycle. So if we were to go down, I don't think this will be a straight down move. We will have some kind of a pop or bounce here with this 10-week cycle, and that one has a top around New Year. So we should be expecting some kind of a Christmas, New Year bounce or rally. So perhaps we could go sideways here into January, or make a shoulder, a lower top around New Year. So let's have a look at, let's see, we have my 4-week cycle. Well, that's still a mystery. So if this old cycle in orange works, it has topped out and it's going down. Looking at going back 1, 2 cycles, well, going back 1, we see we are breaking the offset of the previous cycle, so that's a bearish sign. But you know, what is this cycle? I still don't know, but I will come back to that. I have some clues about it. Here's the Dow Jones hourly data with calendar days, so I have the weekends here within it, and we see that the rally starting in February, the length of this rally is pretty much equal to the rally, the summer relief rally, the length of this rally and the length of this rally, or all similar. Here I have marked this 4-week cycle lows. So it worked nicely into April, May, where we had a prolonged cycle. Then we had a low here. I'm looking at the blue. We had a low here and here, a bullish low there, a low here, and then we had another disturbance. We stretched out. So now we had this low and possibly this low. So this could suggest we have made a very bearish left translated 4-week cycle, and we're going down. I also have the Norwegian market hourly data, and we see the last 5-6 cycles work fine. You have a cycle low here, and then a very bearish cycle with starting here, so you almost don't see this. It's kind of 2 cycles merging into one. And we have a cycle low here, and we still have some 7-8 calendar days from Monday where the cycle points down. So I'll have to make a part 2 of this one, so see you on the next one.